Saarthak, hi, good to have you with us. How have you been?
Hi, Ashu, I'm good. Been very long, but good to catch up with you and have a chat with you after such a long time.
It's been a long time, Saarthak, and I hope it's been a difficult time, right? I think each one of us, you were, in the middle. You'd contracted corona. I hope everybody is safe, everybody is sound. And I think health becomes a priority, right? I think it's so much more
It is,
important.
it is, it is. I think that's what everybody has now figured out, that how much importance you need to give to health rather than everything. Well-being and health of you and your family members is the prime importance. That's what COVID has taught everyone.
Absolutely, Saarthak. Saarthak, this is an interesting session, an exciting session, right? And I've been looking forward to the session, largely because you've been a very young entrepreneur yourself, a second generation entrepreneur, but you've been leading a very large practice within the healthcare space, right? And you've also been very active angel investor, right? And a fairly diversified lot. You run a syndicate. You're part of Indian Angel Network. And you're fairly visible, right, when it comes to going out and promoting entrepreneurship in general, right? And you've been sticking across a lot of forums. You've been Forbes 30 under 30, right? So it's all at that younger age, so many hats to wear, so many credentials, right? You know, thus this becomes a very exciting conversation, and we're going to try and cover all of these facets through the course of
Yeah.
conversation, right? But it's good to have you with us.
Thank you. It's all part of the job, I would say. So, I mean, I tell each and every entrepreneur that if you're doing great work, money and awards will definitely follow you. There is no doubt of that. But the key question is, how do you define great work, and what are the means that you want to take to achieve that?
I think what I would love to start this conversation with, is a quick round of introduction, right? I've of course
Yeah.
introduced you for the many things that you do, but I think in a more structured format, if you could just take us through very quickly with what you do, right? I think it'll be very interesting as a starting point, and then of course we talk about your portfolio investments and so many other things that you've been, doing in
Yeah.
the ecosystem, right? So over to you.
So I generally joke while I'm introducing myself that what do I do for a living is I make babies. I make babies for everyone. And by that, I mean, not to be taken in the wrong sense, is that I had run a chain of fertility centers. We're present across North India and Nepal in multiple cities. Uh, Apart from that, I am involved very actively in with a lot of startups as an investor, as a board member, as an advisor. And I actually believe that yes, money is key to everything, but there's a lot of other things. Where do you spend the money? How wisely are you allocating it? And where is the right resources? Especially in the health industry, money never takes you anywhere. It's the other things of getting the data and how you're allocating all of that. So that's where the role of probably an advisor and mentor comes, that how do you learn from your other people's mistakes? I have
Right.
committed a lot of mistakes, and I would rather want that none of the startups that I'm associated with make those mistakes that I have done. So that
Right.
is all the experience that counts. It's not that I know I have a solution for everything, but I have a solution for not to do, what not to do rather than what to do. So that's my philosophy, that learn from others' mistakes rather than committing your own and thinking, yes, next time I won't do it. That's the key essential thing.
Interesting. Sarthak, I think a good introduction, right, and a fun introduction, right? Not a lot of people can rave about the fact that they make babies for a living, right? That's a
Yeah.
unique position to be in. That's interesting. But I'm going to move into the slightly more, serious and focused side of our conversation today, right? And that's
Yeah.
essentially what we're here for, Sarthak. Sarthak, I would love to understand, and I would want to open this conversation with understanding about your portfolio, right? You've been active in this space, right, for the last couple of
Sure.
years.
Yeah. Yeah.
Before we start talking about macros, how the market's kind of shifting, and your say thought process, right? I'd love to understand your portfolio, and we take it forward across a bunch of other questions.
Okay. So primarily, I started investing in the health tech space since I'm
Sure.
associated with healthcare actively. That was the first go-to market, since I could relate to anything that was coming at me in terms of the pitch, the numbers, everything. So as an investor, I was trying to be a very intelligent investor, that I'll only invest in the space I understand.
Right.
But that's a limitation. So it depends on if you want to be a advisor, come investor, if you just want to be an investor. So that was my thought process when I started seeing that the returns are not that high in terms of the exits that I'm not getting, the startups that are not able to scale. That's where I became sector agnostic, because I knew fintech was doing great. I could see that there was a lot of things happening in the EV space, a lot of hype going around there. So that is where what I learned, as I said, from my mistake was that I don't need to go into the advising mode, but rather my wealth should be increased as an investor. So
Right.
became sector agnostic and then started investing into fintech players and other sectors apart from that. That was my learning. The second biggest learning that I had from my investors was that the percentage of equity doesn't matter. I have
Right.
5%, 10%, 20%. That's the biggest fallacy that I have seen, that spending money and getting more equity, because that equity is of no use unless the startup is able to scale. And for the
Right.
startup to scale, it requires huge loads of money. And if you have someone's pumping in huge loads of money, then your equity would be minimum. So coming back to that, the different philosophy from a Shark Tank and a tech-based evaluation, that 5%, 10%, 20%, you don't eventually get that. You have 0.000 percentage, like I have in multiple startups, but that is equivalent to way higher than 20% of 1 crore rupee evaluate startup compared to a 100, 200 crore rupee startup that is way more valuable. So
That's
those
a
are my two learnings. Yeah.
that's a very interesting point that you highlighted, right? So like, because for some reason, when we look at the angel investing ecosystem, the early stage ecosystem, right? I
Yeah.
think all deals essentially, in fact, a lot of deals fall apart largely because of the percentage of ownership that an investor is looking for, right? And I
True.
think for some reason, I think the way you possibly kind of highlighting it and the kind of way you kind of dealing with it is a lot more pragmatic, practical, right? Where you have to sort of ensure that the consistency in ownership of the promoter and the founder continues to
Hmm.
be very, very high, because he or she is the one who's running that ship, right? And your
True.
wealth creation and growth in wealth is largely a function of how they perform, right?
Yeah.
At business, right? And that's a very interesting point that you highlighted. Something what I would love to understand, right? I mean, you're fairly young, right? You started investing at a very, very early age, right? Healthcare is something which kind of naturally comes to you, right? And that's largely because you've been involved in the space, you understand a lot of intricacies, right? And this could possibly be a learning for many, many people who are going to be watching this, right? You came from a background in healthcare, right? But now it's a diversified portfolio that you have, right?
Yeah.
That you built.
Yeah.
What's your strategy there? Are you leading these deals? Are you basically identifying people you can collaborate with and co-invest with these players? Possibly haven't come across, right? I haven't noticed in the process, but it's always good to sort of collaborate and kind of invest. What's your thesis and theory on that front?
No, so that's actually the learning, as I was saying earlier, that my biggest learning was, if you're an individual investor, you never
Right.
succeed. I have 20% of 10 startups, and all those 10 startups haven't been able to scale, very frankly. My biggest
Right.
learning is that you have to be a part of syndicate. And like a tree requires a lot of water, manure, and 10 other things to grow. A startup generally requires loads of funds, mentorship, the right board, the team, the
Right.
CTOs to the CFOs to the all the other CXOs. So it's not a simple recipe for success. So if I'm investing
Sure.
as an individual and thinking that only two people and the third as an investor come advisor, I'll be successful, that is a failed strategy. That never works. So that's
Interesting.
where I changed and became a part of syndicate, as you rightly said, that became part of our ventures, venture catalyst, IAN, a lot of other syndicates, because then we were pumping in at a minimum, 100,000 round was a minimum, or it was more than
Right.
500,000 on any given day. So any startup would raise a minimum of 500,000 USD, which would actually give them the runway,
Right.
the leeway to make mistakes, understand, be more in control on how to scale. Even that could again depend that the startups are losing 20% of their equity, 30%. But as an investor, I would probably get very less, 0.02%, and sometimes
Sure.
even, in a single digit, 0.6% of an equity.
Sure.
But for the bigger picture, in the larger terms, the chances, the probability of that startup succeeding are way higher compared to as an individual
Hmm.
investor. So I would recommend for any investor to be part of a syndicate rather than investing on a solo basis. And all the startups that we see, and all of them that have went public, all of them that are unicorns now, are
Right.
they have all been able to, only when they have raised successfully have they been able to scale. If you haven't been able to raise successfully, so the fallacy of equity, the equity is not there for the investor or for the promoter. I mean, they have the skin in the game, but eventually it's the big funds that come in with millions of dollars. They also have 20%, 30%. SoftBank would have that much kind of equity in all the billions of dollars they have pumped in. But
Right.
that's where the collective participation of everyone in the ecosystem is required for that startup to succeed. So that's
Interesting.
where the thought process goes, that it's a very collective participation. Don't think about your equity and as an investor. I won't think about my equity. The promoter has to let go of his equity unless you're raising crazy amount of funds and you have the ability to have that team with you to deploy that money in the right phase and get that growth. That's the only way that you'll be
Karthik,
able to.
I like how humbly and and how flexibly are you kind of approaching this problem, right? I think one thing which is clear, right, is that you believe in the power of startups and you believe in the power of technology, right? And I think
Yeah,
uh, and I think this is a good strategy, right, where you can kind of collaborate, piggyback, come as be part of the syndicate, right?
sure.
Where there's a larger lot which comes in and deliberates and and goes through the intricacies of that business and building that business, right?
Yeah,
But something there's an alternate thought to it as well, right? And this is something that I've come across a lot of founders, uh, right, who've highlighted this, right? That too many cooks also spoil the broth,
the
right?
growth.
A
True.
lot of
True.
people approach this entire thing saying that, listen, we're bringing in the money, like you got to listen to us. And I think each one of us, especially when you're talking about syndicate, right? Each one of them have something or the other to say, right? Now, the biggest of all problems that I have at least encountered in such a circumstance, right, is that for a founder it just becomes so much more difficult to, one, handle so many egos, second, to basically prioritize a lot of these inputs that are coming in, right? Because they're coming in from pretty much everybody who's involved, right? They've
True.
put in capital. It becomes literally founder's job to listen to everybody in the process, right? It's not as easy, right? For
Yeah.
certain businesses, possibly they have a great set of people who are not necessarily say intervening, but in a large part of what's happening in the startup ecosystem, and we've seen a huge rush, right? There is, I mean, everybody has a certain say in the process, right?
Yeah. Yeah.
What's your take on this, right? And like I said, right, too many cooks can also spoil the broth. Becomes
It
difficult, right?
it generally does, but unless I would say from a broader management perspective, it's good to listen to experienced people. If you're a domain expert, you're like you have done the algorithmic modeling for your startup, the AI and the ML that's working on the back end, the engine that's working. Nobody will
Sure.
come and tell you how to make the engine work and what's the proprietary algorithm that are using. So that's the startup's role. But when it comes to the eventual management of how the what should be the strategy, how should you target to get the next 100,000 users on your app, on your portal, or how to get the HR into the place? Do you actually need one person? A lot of funds will actually come in and give you the right resources that they will come and say that you actually require a chief HR officer or chief people officer or a chief strategy officer, because that is required. And that is where the experience of the funds come. And if you're not a humble, or I would not say humble, if you're not a flexible person to
Sure.
listen to the funds, to because they're speaking from their experience. They have to
Right.
help you in raise the second round, the third round. They're going to participate in all of them. And I have seen, that they push people for you because they know that these people can actually drive this growth for you.
Sure.
A lot of them, because everybody's looking for growth, everybody's looking for numbers to be using your product, your service, whatever thing that you're selling. You require scale, and that scale can become with only the right team. So if you can't find the right team because you're thinking that you have a very set process, you have probably seen the product, you're too attached to your baby, you don't know. Even very frankly speaking, Sachin Tendulkar, he was the greatest batsman in the world, but he definitely had a coach all the time. The coach would actually tell Tendulkar, to play the shot like this or that. He could have easily said that I am Tendulkar, I don't need to listen to anyone. Or even Cristiano Ronaldo can actually say that I know you don't teach me how to take the free kicks, like the technical aspect. I know how to do, but in the overall strategy of things, how to pass, and how to build the team around you and the way forward and the attacking style and the defense. So that's where the management comes, that's where the funds come in, and that's where the investment and the advisory comes in. So I would say that yes, there are always examples of too many cooks spoil the broth, and that can be even for co-founders. There are six co-founders.
Right.
There can be a fight, but and that's where the synergy has to be there, and the mental strength between
Interesting.
as a founder has to be there. That you need to take everything in your stride. You're the sailor of the. You're not the sailor of the ship. You're the captain of the ship. There are going to be sailors part of you, but the captain has to steer the right way.
Interesting. Sarthak, there are like many, many questions that come to my mind, right, when I'm talking to you on this particular point, right? And I think what you've highlighted are some very pertinent points in the entire scheme of things, right? But I'm going to save some of that for our next conversation, right?
Yeah,
I mean, given this is our first interaction, right? I would
yeah,
rather want it to be a little more macro, right? Now,
Yeah.
Saarthak, one thing that I would want to move to, right, is basically, what's we've seen, what is it that we've seen, or what we've seen in COVID, right? And I think
Yeah.
2020 has been, I think each one of us will agree that 2020 has been a very, it's been an aberration, right? It's been a disruption. It's been an unreal event, right? Something that we none of us were prepared for, right?
True.
And
True.
it's a complete shift, right? Now, what I want to
Yeah.
particularly talk to you about, right, is that the market has shifted, right? The way consumer consumed has shifted, right? Um, you know, uh, the expectations become so much more superlative.
Hmm.
The speed has become so much more, higher, right? The
Yeah.
expectation from brands is very, very high, right? They'll have to build a lot of mechanics to continue to engage, with their consumers, right? So it's not something. So we entered a phase where the consumption is not necessarily going to be as consistent, right? Because people now have information
Hmm.
available. They're going to experience a lot more things. They're going to be exposed to many, many things, right? Investing is
Yeah.
going to become very, very difficult, and especially for startups, right? Because these are essentially early stage businesses that are not necessarily, do not have adequate capital with them. They're essentially growing from pace to pace, right? But now
True.
they're part of a digital ecosystem where the expectation is going to be higher, right? That
Yeah.
means the requirement for capital could overall shift, right? How are you reading this particular trend, right? Because do you think angel investing participation, the kind of participation that we've been seeing, right, is going to change, is going to become
It's
higher?
it's yeah.
Uh, and
Definitely. I
also, do you think the risks are going to get so much more higher as we go forward, right? Because of the kind of emerging trends that we see.
True. True. So uh, I always tell anybody that wants to become an investor is that any capital that you have set aside, that you're ready to put down the drain,
Mhm.
you're ready to lose that money completely. That's like a you don't think about that money, then start investing. Don't
Right.
think it in terms of a real estate project or any other business venture or anything, because angel investing is purely risk at all,
Mhm.
or any kind of investments into startups. The numbers which were like earlier 1 in 99 startups were successful, probably that number has increased now.
Right.
But it's again, when you're investing, there is no surety. It's the highest risk possible in kind of investment out there. So, but apart from that, as you say that the knowledge, the technology, and the other aspects fueling the growth for investments is there now. People now believe in the system. People, the full cycle, as you say that what was there in the US, where the startups would go public. So it's completely shown that yes, there is a cycle to it. That even the funds that invested, they have got an exit. The early stage investors were already getting exit, but now the cycle is there. It's a full circle which multiple of these startups from Nika to Zomato to Paytms to Oyos and Boats and all of them which are filed for their DHRPs, were going to be listed. Just shows that yes, there is scope, and the retail investors, investors, probably people who do stock market trading, which is
Right.
like in crores of Indians which are doing, they have shown faith into these startups, which is the money being pumped in at the end of the day. So that's a full
Interesting.
throttle for me. So for saying that, I'm only seeing an increase in trend. The number of investors out there have increased tremendously. Um, People who had a stopgap analysis, no, there is no asset to it, it's too risky. They have now started coming out that okay, let us also take a few risks, because they've seen that okay, the startup that we are funding, they're raising a second round and a third round. So they're always those success stories, and that success stories are now started coming out. So seeing on that scenario and riding the startup wave with our prime minister and our nation giving a special emphasis to startup policies, and even in this budget that there should be a startup for this, there should be a startup for that, so much emphasis. So why wouldn't the investment increase? When you talk about startups then generally means valuation and investment. So with the government is giving so much emphasis, so there is definitely bound to be more investment and more risk taking. So
Interesting.
that's a general trend.
I like the way you put it, right? That if you have completely disposable capital, right? I mean, if you really want to,
It's true.
you
Yeah.
have no, you don't have any expectation from that capital, right? And that's when you go out and
Yeah.
invest in startup, right?
Yeah.
I mean,
Yeah.
trust you me, Sarthak. I mean, I come from at least the school of thought where I think what we've experienced in past possibly 2 years, right? We are not necessarily, kind of cutting it right. I think the impact that we've had is just so much more that I think every single asset class has gone through a massive disruption, right? And I think
Yeah.
possibly next couple of years are going to be very, very different when it comes to any of these asset classes, right? So value creation uh, momentarily could be different, right? But I think in the long run, a lot of these assets are going to look very, very different from a return standpoint. Possibly startups will stand out because they are the ones who really understand the digital ecosystem so much better, right? So I
Yeah.
think a larger part of your portfolio can now go into startups and more scientific, right? More importantly, because the
Mm-hmm.
consumer is now consuming from a more evolved digital informed ecosystem, right? It's like a stock market, right? Where every single piece of information is now available, which essentially means the market is going to decide for better, right? Going forward. And that's at least how I look at it. But, moving to a different side of it, right? What are some of the macro trends that, for example, you are looking at, Saarthak? What we've seen is massive exuberance in the market. What we've seen is a massive round of liquidity, right? And that's largely because of lower interest rates globally. Money's come into emerging markets, right? And we're like
Yeah.
the last billion people market, right? Do you think this is I mean, we've always questioned this in the startup ecosystem, right? There are a lot of startups go on to build with engagement as a currency, right? And delay cash flows, right? And
Yeah.
some of the most marquee, highest valued startups are not necessarily cash positive, right? In many ways. Do you think there has to be sensibility which has to prevail? I mean, given that you are on that side of it, or are you okay with engagement as the primary currency right now, and cash flows could continue to build up over a period of time, which I very firmly believe might not necessarily be as solid a thesis, in the current environment that we are in, right? What's your take of it? I mean, how do you cut it? I would love to understand that.
So generally, I would say that there is any business or startup work with the same financial fundamentals. That there is going to be a huge capex, and
Sure.
then the upside would be there after 4, 5, 6 years. It's
Right.
not that Reliance or Adani Group, they're not startups, but they generally have more than a lakh of crore of debt on their books. More than that, 1.5 lakh crore, which is a huge number. That's not even close to any startup being raised, any one particular startup being raised amount that of money. But that's the debt that they have taken. Based on that factor, coming back to the point that any startup, even in all the investors and all the VCs or the PEs that are investing, they're investing till a certain point of time. Fundamentally, after their cycle of 5 years or 6 years, it's expected that they have to become cash flow positive. They're not going to, the metrics for the first 4 or 5 years is different. It's the same thing. If I have to tell you in a non-startup way, Geo did the same thing. It invested 3 lakh crore rupees. It started giving SIMs for free. The talk time was free. The amount of money that was spent by
Right.
Geo was tremendous. But the upside was, give it 3 years, get users addicted. And after the 3 years, I'll have a basic plan of, I don't know, 300, 400, whatever. And my revenue would be this. And then I'm going to start earning profits. So that's the basic fundamental for any startup in that way, that, that I rather need to get users. Once those users are there, let them get hooked to our service. And we have to be a great product and a great service first of all. And when the users are there, and then even then, if we charge a premium for our service or if we put a cost to it, people would pay. That's a basic fundamental.
Right.
So coming to the point that can they be cash flow positive from first day, second day? It's very difficult because then the scale becomes low. The scale
Right.
is not there. So that's a
That's a trade-off.
yeah, that's a definition probably between a business and a startup, that I can be cash flow positive from the 6th month or the 4th month, but then my scale will become very limited because I want to be cash flow positive, or I want to have a positive EBITDA. The term EBITDA is only for business. It cannot be for a startup. The startup can only have a margin. The
Sure.
margin, then there is never a net margin, because you'll always be in losses for the first 2, 3, 4 years while you're trying to scale rapidly. You're trying to be in 20 cities. You're trying to get users across all geographies. Tier one, tier two, you want the middle class, you want the poor lower class, you want the upper middle class. When you're trying to scale so heavily and differently, you're just going to spend, and you're never going to be profitable. Your margin may be there in the product, but there will be always losses on the books.
In
So even
Interesting.
so,
Interesting.
so
Sarthak, this is. I think this is a section. This is a question. I think which will possibly require us a separate, session altogether, and we'll possibly do
so
that, right?
yeah,
I think in the coming days, right? Sarthak,
yeah,
I'm going to move to like a bunch of things that you kind of highlighted, right? And I think what is
Yeah.
also getting reflected is that I kind of understand where you're coming from, right? And I
Mhm.
believe in engagement as a currency, and I think it's a very, very important currency, because going forward, I think every single brand, irrespective of how traditional ethos that it comes from, right, or the newer world brand, I think will have to build engagement, right? So I am at least of a school of thought that engagement will have to be a very, very definitive currency that's there. But also brands will have to start, the unit economics will have to start proving out much faster.
True.
Right? I think we're in a different ecosystem. We cannot continue to delay that beyond a certain point. Valuation will have to, there is a certain reality that will have to come in basis the unit economics, and how adoption, for example, is happening, right? The good part is we're becoming a homogeneous market, right? Which could mean that, the visibility could just be so much more thicker, right? Smaller instances could help us project more confidently about what the future is going to have for the brand, right? So
Yeah.
like moving on to wanting to understand, what are your assessment parameters, right? When you're making these investments, right? What are some of the parameters that you look at? Would love to understand that. If you could break down, say, the top 3 or 4 key parameters that are very important when you're looking at investing, will be very helpful.
So yes, for me, the three parameters that I generally look for is the team. The team becomes a very important factor because uh, most of the startups I've seen that fail are, when there's a co-founder conflict or the team is not great enough. They say that the product will do anything, but there's not a chief technical officer who's there to drive the product. They might be creating a tech product, but that tech product is probably a website, and they say so. That's where the team for me is the most important thing that comes into play. And the chemistry between the founders themselves. That's the second thing. That's part of the team where I'm judging the team, their technical excellence and the chemistry between all the founders that are there. That's one thing. The second thing is the need for the product. Are
Right.
you actually solving a problem, or you're just making a product to be famous and run a startup, which is the silliest thing that most of the people are doing? No, because I run a startup, I'm a founder,
Right.
I'm a cool. My LinkedIn says I'm a founder, I'm a this, a founder of blah blah blah. But actually, there's no problem solving in that. So the
Right.
need and the actual scalability of the product. That
Right.
when you say there's a need, is there a need, and is that product required by what's the addressable market size? The time, as we put it, I you might have a broken foot or there's a plaster required, but when you say I'm going to mold the plaster, so what's the addressable market for that? Just an example in that sort. That
Right.
is there huge need? Yes, and then I feel for that. So um, the product, and then third, the pricing, which is what how are you pricing your product or your service? When you're talking about need and then you talk about numbers in huge, my single service or product cost 20,000, 30,000, then you're not meant for India.
Right.
India, everybody is price conscious from the lowest of consumers. You might launch a new beverage and then say this is for 300 rupees. Then you're losing out on 90% of the Indian market. Those 300 rupee beverages for the very limited, very niche player. So it has to be according to Indian standards. I've seen so many founders come to me that this thing is going great in the US or UK. It has just ripped the market, but that cannot be replicated. The same thing in India will fail tremendously because the consumer spending power, there is no labor over there. Everything is done by themselves. The mechanics that work over there does not work in India.
Right.
So the fallacy of just copying a concept from abroad and thinking of implementing the same in India does not work. It has to be tweaked into the way that your market is. So that's why the three things that I'm trying to understand, that how has the team, the total addressable market, and how the pricing structure, or how have they facing consume thinking about the market that they are in. So that's my philosophy, just to put in a very brief nutshell.
Interesting. And something just to sort of understand, I see distribution is very critical, right?
Yeah,
Uh, I mean, we were talking about scaling, right?
yeah,
Distribution typically is very, very challenging, right? I
true.
think
Yeah,
2020 has been phenomenal in the sense that now people are essentially very comfortable consuming on digital ecosystem, right?
yeah, yeah,
E-commerce has become so much more pertinent, right? And just life
true.
has become so much more easier, where you can find a very quickly order, and and all of that, right?
Yeah,
Uh, how are you looking at distribution, right? Do you think, I mean, there are two ways to look at it, right? One is that if you're in a digital ecosystem and if you're distributing it
yeah,
digitally, right, you essentially will have to really be one step ahead of competition, right? You constantly have to be innovating, which is phenomenal, right? Because
true.
from being a cut copy based economy, we are now moving into
Yeah,
original thinkers, right? Which is just so much more phenomenal. And the good
Yeah.
part is there's going to be over a period of time more data, right? But also there are certain brands, uh, which believe, right, and there are certain founders which believe that the traditional ecosystem will continue to, and distribution system will continue to be of significant importance, because India will still be a market, and it's going to take some time for us to sort of evolve out of this, which is going to need touch and feel, right? So you
Yeah.
necessarily cannot give up on the traditional ecosystem, which means that the requirement of capital could be so much more different,
More.
right?
True.
You'll
True.
possibly be deploying more working capital, more money in working capital requirements, right? To ensuring that there's consistency, in product service that is offered in the last mile, right? I mean, there are just so many complexities, right? What's your view on
Yeah.
this? I mean, are you looking at companies that are fast in digital distribution, or are you more comfortable with companies that also have a bent towards, say, a traditional partnership model of sorts, right? Having a large layer of distribution.
So
Um,
no, generally what my knowledge and or startups have shown is that the easiest way is to scale digitally, and that's the easiest way. But you cannot rule out the offline play. And there are examples in front of each one of us that have actually told that yes, you scaled digitally, but eventually the Indian customer wants to have that look and touch and feel of the product,
right,
and that's where you will see there are Lenskart stores, Nika stores. There has to be that physical. If you're a product, if you're not a
right,
product, then there's a different thing. But when you come to product, you can scale as much as you want digitally. And then eventually, at the end of the day, you need to have your offline presence, and that's where the omni-channel play comes into play. That it's not only an online play; it has to be an offline play plus an online play, which becomes an omni-channel presence. So, but starting scaling the other way. So this is what startups have done, and this is the eventual way forward for any other startup, is to scale online. And once they have that big enough user base, then go the offline way. The other way, the traditional business way, that I have my capital, okay, I open a store here, then I make a profit, then I open the second store there,
right.
then the third store there. So you're trying to scale through by offline measures, but then that's not. So you have to
Or
scale
have large,
through,
or have
yeah.
large distribution layers, right, in
Yeah,
chains,
you
right?
have to. Yeah, but then also that's again, yeah. Then the product shifting thing is, so that's where the online way is a central distribution, partner with something, courier everything. You don't need to make decentralize things. So that's the whole supply chain and the distribution model that you're talking about. So,
Interesting. And
uh,
focus on delight with the product, right? I think is what you are kind of
yeah,
highlighting. Sarthak,
true.
what are the next couple of investments like, right? I mean, we're towards the end of a conversation, right? What are the next couple of
Yeah,
investments like? I mean, you've been looking at a lot of these things. You've been fairly active, right? Like I said,
yeah, yeah.
would love to understand what are some of the things that you're investing in next, right? Or say macro trends that you think are going to play out very well, right? And you're possibly looking for, say, startups within that zone.
True. So EV is one space which everyone is a gung ho, because eventually everybody knows that we are running out of the fossil fuels that we are consuming, and petrol, diesel, and even the Saudi government and the Dubai government also know that that it cannot go on for longer.
Right.
We have to keep the environment. So whenever the environment factor comes into play, the clean tech system comes into play. So EV is at the forefront of everything. In India, particularly, if I want to talk, with the government supporting a lot of scope in the agri tech, it's a
Right.
very difficult play. A lot of people have tried, but the scaling in agri tech is not easy.
Right.
Because you're actually working with the bottom of the pyramid. You're actually working with either farmers or completely in the rural ecosystem, where there are way more challenges.
Right.
So there's a lot of future scope, but agri tech is a very pretentious and a cautious subject from me as an investor's perspective, because I've seen more startups fail in that, because a lot of people are subdued by the problems that are down there, which cannot be understood by a startup working in a tier one or a metro city. So
Right.
EV for me, and fintech is evergreen. Money, making more money. Fintech, you can never go wrong. If that's something, whatever in terms of lending, raising, finding out, making money, transact easily between two people, between the whole ecosystem, that never goes wrong. So that you will find probably the most number of startups in the fintech space, because that's where if money is transacting somewhere, the company is seeing, so they can just seeing the easy GMV. The most number of startups are in the fintech space, and that's
Interesting.
the most easy place. So if you can figure out a model which is working for you, I've seen varied models now. The interesting thing was, there was a company that came in that based on the 15-day salary that you have, you're going to monitor your system, and if you want a 2-month loan advance or your salary, we're going to give you that. So,
Right.
wow. Okay. So, so instead of, when you have your half salary, even after that, if you want to come, we are going to give you, probably that. So there are plenty of startups coming in that space. And that's where I think that fintech never goes wrong.
So
any kind of
I think
lending in that space.
I've been personally a big fan of fintech, right? I mean, I'm a fintech enthusiast, right? A self-claimed fintech enthusiast. It's phenomenal how some of the startups are very innovatively tackling, right, and kind of
Yeah.
democratizing the possibility of participation across newer asset classes, right? I think it's just
So,
amazing to kind of see that, right? Uh, Saarthak, you are a healthcare. You have a fairly large setup
so
when it comes to healthcare, right? It's a fairly diverse, spread out healthcare. I mean, understanding that you have, right? What are some of the opportunities that you're looking at healthcare particularly, right? Because this is something which is very closely aligned to what you
oh,
do, right? I mean, you understand it
true, true.
much better than a lot of people
Yeah,
on
yeah.
the outside would,
So
right?
with COVID coming into place, the amount of investments into healthcare has increased tremendously.
Sure.
Without COVID, there was a huge gap, because healthcare is traditionally driven by doctors and
Hmm.
not so much about patients. But all the health tech startups, the mistake that they were doing is they were looking from a patient perspective,
Sure.
whereas the administration of a health done by the doctors on the other side. So you can
Right.
create as many great apps you want, but the data has to come from the other side. The
Sure.
patient will not start keep on filling each prescription and everything, and that's where most of the early adopters of healthcare are facing a challenge, and
Right.
they will never think from a bridge between a doctor and a patient and how to ease that bridge,
Right.
essentially making doctors do all the work. So it was very big challenging thing in health tech, but with COVID
Right.
we've generally seen that, and from a healthcare perspective, I keep pharmacy to a separate thing because that's a product kind of a game. That's a
Sure.
very different ball game. There are behemoths in there already, which have
Right.
done, which have been acquired and merged and about to become an IPO themselves. So
Right.
those that's a very separate thing in itself. Health, particularly for me, is a lot of scope because there's a lot of gap. Most of the
Interesting.
startups, the success of a startup is bridging the gaps of solving a problem.
Hmm.
A country like India, where the insurance and health is very less, health insurance taken by people is very less. The rural, all the health is probably in the tier one city. The healthcare providers, primary healthcare, there's no means to it. Technology adopted by the rural people for health is next to negligible. So
Right.
there's a lot of scope, but again, it's challenging. So a huge scope in our country with a diverse population of 140 crore population that we have, to do anything with that kind of population or to bridge the health divide that is there right now in our country, is a potential unicorn opportunity already itself. A
Very
very
interesting.
challenging thing,
Very
but a lot
challenging,
of
right?
scope.
I
Yeah,
think time taking thing, right? I think we're a
true.
we're still building a last mile, right? So I think with that,
Yes.
I'm sure many people can understand that it's not something which can scale immediately, right? It's going to require a lot of capital, a lot of
Yeah,
infrastructure, right, at a foundation
yeah,
level for
yeah,
it to
yeah.
kind of get to that point, right? Sarthak, last question, right?
Yeah.
In this conversation, usually this is something that I reserve for more advice, suggestion, right?
Yeah.
I'm going to do something different, right? I'm gonna put you in the spot, right? And I would
Mm,
want you to let this be, say, a suggestion, right? For many founders who are going to be watching this, right? What are some of
mm,
those, say, the top three things, right, that you think a founder should always ask an investor? Uh, I would want you to comment on that, right? Because my sense is, you are an entrepreneur yourself, right?
yeah.
You are growing your business, you're building that business, right? So you come from a very unique, or you're in a very, very unique point where you understand the
Mm,
sensibility, and the sensitivity which founders, for example, need, right? When they're
mm,
growing the business,
mm,
right? So what would, and you're
yeah.
investing, right? So what would that
Mm,
question be? Say the three questions that any founder should ask the investor, right? Because in India, you know, we don't ask questions, right? We essentially get carried away and
true.
overwhelmed by the fact that somebody is bringing in capital, right?
Yeah.
We don't
Mm.
understand the expectations. These are challenges, right? What would those questions
So
be
as
if
you
you were to
rightly
ask?
said, you rightly said that there has to be an alignment between the founder and the investor.
Right.
But if the investors are purely investing for money and not coming on for advising or mentoring, so that's a divide that even if the founder asks the investor about something, but they won't be interested, or they won't be giving the right justice to advice that they're giving. But
Right.
if you are aligned and if you want, I think the best perspective is to be taken, put each other in each other's shoes. And if the founder is asking the investor that, what is your strategy to scale if you were making this product,
Sorry.
because that's the alignment that I would look into investor, that yes, he's going in the right way. And if your
Sorry.
strategy is aligned, just an thing that I have, as I said, I am a cocktail maker. That's my new startup, and I want to do a supply chain distribution. But if I, as an investor, says that no, you're going to lose money, because I've seen a lot of, there's a graveyard of bottlers out there. You have to just scale digitally. And if there is alignment over there, that is the scaling that we are both aligned to that piece. So that's the first and the foremost thing, that your synchronization is there as something. So the founder, doesn't matter what amount of money the investing or what equity is in, but if the alignment to scale is there, that's the prime most important thing. The second thing is obviously that okay, you're giving me this amount of money, but I will probably need more money 6 months down the line, 1 year down the line. How will you help me? Will you help me in the second fundraise or down round, or increasing and potentially increasing to the new customers? This is the second thing, because fundraising never stops within the first go,
Right.
as I rightly said. And the third thing is that as an investor, how active, do you, a lot of investors have a very different thought process. If you're investing through a syndicate, you generally have no role. But if you're investing, is that how much do you actually want to become a mentor and give 1 hour in a month? Because that's the most amount of time that probably an investor would give, 1 hour a month. Actually steadily take out from your time and give them. If you're actually able to give them, then you are you're not only an angel investor for them, but you're a godsend angel for them. With the halo on top of your head and trying to be
Interesting. I like the way you put it, Sarthak. I've enjoyed this conversation, and how I want these conversations to keep going on, right? There's just so much of insight and intelligence that I think founders, investors, and all stakeholders in general have, right?
yeah.
Is phenomenal, right? I mean, if in some way we could map a lot of this, I would love to do that, right? It could just
So,
become so much more faster for people to very quickly refer to a lot of these perspectives, right? But I think we're,
yeah.
we're trying to sort of do a reasonable job, right, by bringing in a diversity, by asking some of the more complicated questions, right? And I think more importantly, trying to understand the trends going forward, right? With
Mm.
that, Sarthak, thank you so much for taking the time out. It was a pleasure to have you. This
Pleasure
was
is all mine.
sharp, this was quick, and this was crisp, right? Thank you
Yeah.
for sharing your perspective. I've known you personally, right, and I have seen you contributing to many startups and many founders, right? And I think in a way you've been very you know straight and honest, right? And I think one thing which just stood out about your ability of assessing an investment and working with the founder is that seeing that road, right, and helping them prioritize better, which is just so much more important, because on a lot of occasions that is critical, right? Given you're working in a
So,
resource environment, right? With that,
yeah.
Sarthak, thank you so much. I wish you all the very
Thank,
best with what you're doing, and hopefully we're going to have you much sooner with us discussing about some of the other investments that you're going to be making, right? So thank you so much for
sure.
taking it.
Thank you. Pleasure is all mine, Ashu. Thank you.